What is the NEO Special Credit Opportunities Fund? The NEO Special Credit Opportunities Fund is a SEBI-registered Category 2 AIF offering investors an opportunity to participate in high-yielding, fully secured, cash flow-backed investments within the vibrant private credit space in India. What is the investment philosophy of the fund? The fund invests in EBITDA-positive companies operating in well-established industries to solve a special situation which are typically not funded by traditional channels like banks and NBFCs. These situations include acquisition finance, refinance requirements, last-mile financing, loan against shares, exit to private equity, stake enhancement, and one-time settlements. It targets an annual internal rate of return of 22 to 24%, capitalizing on the growing non-bank-led credit market. How does the fund achieve 22 to 24% returns? The fund achieves 22 to 24% returns by providing flexible, long-term capital to companies for solving a special situation. Banks and NBFCs, due to regulatory restrictions or ALM issues, are often unable to provide financing to mid-market corporate segment. As a result, private credit funds step in to fill the demand-supply mismatch and earn a premium. Why would a borrower pay such high rates? Borrowers typically turn to private credit because it offers much required funding with the flexibility and speed that traditional banks and NBFCs cannot provide. Private credit arrangements allow for customization, confidentiality, and quicker execution, factors that make it highly attractive to borrowers. The premium borrowers pay is often a reflection of the significant value they gain from this private capital. Many of these borrowers are EBITDA-positive companies with a strong focus on growth or restructuring, willing to pay higher rates for the access to capital that enables them to meet their goals efficiently. The incremental value addition of private capital is significant enough for the borrower to be able to pay higher yields. What is the safety of the fund's investments? The safety of the fund's investments is derived from several key metrics. 1. The fund only lends to EBITDA-positive companies generating steady operating income. 2. At least 2 times collateral cover to mitigate risks. These are typically hard assets such as plant, factory, machinery, other fixed assets, pledge of promoter shares, and personal guarantees. 3. Stable leverage levels with a debt to EBITDA of less than 4:1. 4. Investments are made in traditionally asset-heavy industries, allowing for good collateral cover. 5. The fund typically acts as a senior or sole lender in all these transactions. Each investment undergoes a rigorous due diligence process, which includes the following 4 checks. Promoter diligence, which includes forensic checks. Technical due diligence, to access the asset quality. Legal due diligence, conducted by independent third parties to undertake all escrow paperwork. Financial due diligence, and ongoing monitoring by the internal team. Post-investment, cash flows are regularly monitored through third-party consultants and internal reviews conducted monthly, ensuring continued safety and stability of investments. What kind of distributions can an investor expect? The fund offers consistent cash flows, providing quarterly coupon distributions of approximately 4.5%. To date, the fund has made 5 successful quarterly distributions from Fund 1 and plans to continue this trend in Fund 2. As a Category 2 AIF with pass-through status under the Income Tax Act, the fund must return all income to investors. The fund will reinvest the principal during the commitment period, distributing only the interest. While the total fund tenure is 6.5 years, the effective economic life can be 4.5 years as principal repayments will begin from the 3rd year. How many deals are done in Fund 1? NEO Special Credit Opportunities Fund 1 has deployed approximately 2,012 crore rupees in 20 transactions, well diversified across 12 different sectors. Prior to committing to these 20 transactions, the team has reviewed over 450 transactions in the past 2 years, showcasing their disciplined and selective investment strategy. The current tracking IRR of the fund is 23%, with an average deal size of 120 crores. Additionally, the fund has 25 deals in the pipeline, ensuring continued growth and diversification. Have there been any exits so far from Fund 1? Yes. The fund has already exited 6 out of the 20 deals in its portfolio. These exits were achieved thanks to timely capital infusion, which allowed the companies to generate strong returns and secure cheaper funding from traditional banks post-R lending. The capital from these exits have been redeployed to generate further returns, while the interest has been distributed to clients through quarterly distributions.